With the market up near its highs, coming out of reporting season, pointing down a little bit, we look at Gary's portfolio, which is almost fully into cash. He's used the opportunity to reset the portfolio, reset all of the positions, and make sure there are stops in the right places. And it's all on one page for us now. So when we scroll through the report, and you can screen share or pause this, I should say, you can see all the positions there. So Gary, market's high, reset. We say good morning. How are you?
Yeah, no, good. No, I just noticed like there were so many big moves last week, and so many stocks were popping that so many targets got hit last week. It was just pretty much my portfolio was literally halved in a week through obviously some good pops and all hitting targets there. So there was just heaps got hit. So wound back the cash, pretty lowest cash balance I've had for quite a while. So I thought I've been carrying some CUV and some Spark here for quite a while, probably a few pages back. So I just took the opportunity just to close them out on Friday and reset them at the same price here, and just bring everything onto the one page here, so that it's just easier for me to track it, but easy for everyone else as well to follow it. And it's probably something you do anyway. If you've had some pretty big wins there, that's probably the right time to sort of close out some of those sort of longer losses that you might have been holding for a while. So I've just just rolled them forward here, and then I've put some stops and targets in place here now. So just kind of been wanting to clean it all up and make sure, and I just have stops in place for everything now. So moving forward there, I'll do my best to never not have a stop in place moving forward here. So but the market's been pretty friendly, Chris. Pretty big moves. My lower portfolio, and I think I'm only like probably average 2/3 invested. I'm up 13% here just in the first 10 months of the year. That just tells you how incredibly hot this is. And I don't think I'm doing the most awesome job here, but I think it just tells you the market is on fire. So, but yeah, so just I think more likely we'll probably get a bit of a cool off here, and so be pretty hesitant to add to a new position here at the moment unless I see something, really high grade here. So, but we just keep taking the good setups as we see them, and then we'll go from there.
Well, taking those good setups, we run that under the umbrella of the overarching movement that the indices have, and we come to you for those insights each week to share with us what your outlook has. And for those of you new to this, Gary outlays a blueprint at the start of the year. So 2025 mapped out where he thought the highs and lows would be. It's been pretty good for the last few years. So that overarching banner, we're into that stage now. You said the sweet spot was April through to August. We are in September now, and that September, I think you said September to October, is sort of that wishy-washy period. It's going to be a bit choppy, not necessarily a huge pullback on the cards. For the NASDAQ, is that still playing to that playbook?
It is there, but we're probably the NASDAQ is probably, and maybe the XJO now, probably overshot a little bit on the upside. So in terms of sort of where they normal markets might expand to after having that sort of big pullback, and then go back to retest the high within 3 months, and then pushing on like another quarter range. So that's kind of the classic sort of setup. So that's all most indices have all done that now. But the NASDAQ and the ASX 200 actually have pushed on a bit further here. So almost to the 1/3 of the range there, which is a pretty big expansion there, considering you've had a pretty deep pullback into April. So without a breather here. So I still think we'll sort of see a bit of a breather there. I just think they just need to cool off a little bit there. I mean, that 22,336 there, Chris, the 200% expansion, that would be a good top for the end of the year. So, look, maybe we'll get more. I don't know, but that's a fair level to sort of keep an eye on longer term. So we've kind of gotten, we've got a little too close to it. I think I would have liked to have seen it just pull up a bit shy, but pull back here and then come back here. But sometimes we can get those expansion. We can get expanded tops here. So, but it does look a little tight here. We're just starting to see a few down days there. I know I feel the leading stocks sort of started to break down a little bit, Chris, as well, not follow through. So, go to new highs and then sort of not fail, but just kind of pull back here. So definitely starting to see a little bit of rotation there, a few distribution days, a few failures to kick on here. So, yeah, kind of leads me to think we'll probably get a period of consolidation here.
So that's NASDAQ, you said. We'll just jump over the S&P 500 for a second, because you mentioned the Aussie seeing to a bit of a similar hymn book, that it's really extended quite far, a bit like the NASDAQ. And you mentioned that the NASDAQ was getting close to those levels, a little bit too close for your liking.
Yeah.
Has the Aussie done something similar that it's kind of concerning it hasn't come that close? And then the second part of the question, does that leave us more vulnerable for a slightly harder pullback than what you'd anticipated at the start of the year?
Yeah, I mean, it's like we've just seen so many of these markets in the past there when they do bounce back from a pretty deep pullback like this, and then they power straight up to the high and go through it and then kick on a bit further. They usually will expand a bit further, and then they'll come back and retest the high and then go on. It's just certain configurations which just happen, most common sort of setup. So it just happen pretty regularly. So, but yeah, the XJO is now past that 125 and almost gone a third of the range. It's a fairly large expansion. So, we are sort of due for a bit of a pullback there. We saw the Nikkei do this earlier, expand 6 weeks and it pulled back 12 weeks. And then it went after that. But yeah, just think we might just sort of, you can see that extra there. You can see how it sort of would look like a little bit of exhaustion there. Had a couple of days down, tried to rally like probably about twice as many days upwards, and it couldn't go to a new high. So that's kind of running out of puff on the daily there, and we started to break down a little bit here. So that is sort of showing a little bit of weakness there finally for the index, and that's after almost getting to the to that third expansion there. So it's a fair move here. So yeah, it's just kind of more of a classic pattern there to sort of come back and retest the old high here. I think the 65, that 50-year cycle there, exactly that, 25 expansion came back. It actually shook out the low. So it actually undercut the low. Looked like the market was going to roll off, probably, shook everyone out. The old classic sort of spring sort of, wash out, and everyone panics at the same time, and then reversal, bang. So the bears get screwed, thinking that the whole thing's going to roll off, and then get bang, and then this bull market never ends, So, but it's but that's a classic pattern. I just think we might be due for a bit of a soft patch here. It's also I can see this consolidating back here, but that's still only looking at sort of forward a 7% pullback in the market, Chris. So nothing too deep. It's just an orderly correction would be nice.
An orderly correction, 4 to 7% is not really that large. A lot of clients will look at that and say, well, I've got to pay brokerage on the exit. I'm not going to liquidate my portfolio and then try and time the re-entry. I will ride it through, take some dividends, and take the guidance along the way. We've skipped over the Dow Jones and the S&P 500. Is there much more to grab out of those charts, or is it?
No, I mean, the S&P is the one that's probably held that 25%. So it's done a bit of work here the last 3 weeks without pushing on. So it is struggling to sort of push higher there, which is a good sign. But that's that's the level where we want to see resistance at, and then come back, and then still on top of the previous high, and then go again. So that's the broader market there. So far that's the one that's sort of playing ball here. So far, that looks consistent with prior sort of movement. So the Dow Jones is the one that's behaving a little differently. So I thought that might have initially it was staying under the high, so it was probably lagging, and then we popped through the high, and then that's unusual to go to a new high and not kick on. So that had a bit of a burst there, but it's sort of in the middle of nowhere really. So it's so maybe it's going to do its own thing here. So just the S&P, the broad market, is probably just the better indice just to sort of map out here. It's at this stage here, that's sort of being a bit truer to what it normally does.
And then we want to look down below that layer of what the indices are doing within the context of what the market's doing. The different layers, sections, segments, pushing, pulling, they're all moving. We've seen some reporting season have a huge amount of volatility. So a lot gets washed out, a huge amount of gaps, ups and rallies, pops into what you've said has been a very strong momentum market. So in the context of that, we're out the other side of reporting season, a few rats and mice still to report. Webjet, that's made it to your list. So why has it made it to your list in this current market environment? What has caught your eye?
Yeah, to be honest with you, Chris, it was a tough look on the weekend. There wasn't like an abundance of great setups out there. So yeah, the one sector that did sort of stand out to me was actually that travel sector. They just sort of, yeah, it's been pretty weak here. Obviously, a lot of the conflict around the world there has probably impacted travel as well. But um, there has been a little bit of volume activity in the last week here at kind of these lower levels for a lot of the travel stocks, and the price action is sort of tightening up here. So I thought kind of interesting here that we had that nice drive out of that low, and then had a fair pullback. But then since then, the whole thing's starting to tighten up again. So it is tightening up in this this BCP, but and we also got a bit of volume there as well. That's probably the thing that's just jumped out is the volume here in the last week here. So yeah, so we're just seeing a bit of a consolidation there. So I thought, okay, maybe that's maybe there's catalyst for change coming here. So it's something to keep an eye on there. So still no trade set up there yet, but I think if it does sort of tighten up a bit more and then break out here, this would be definitely worth one on the follow here. But it is sort of, I mean, the Flight Centre is sort of something similar. It's sort of does look like it might be building a bit of a base as well. It's not quite as tight as the Webjet, but the price action is tightening nonetheless. But it is sort of hanging tight on the higher end as well. So it's sort of staying, keeps sort of rallying off its lows there and staying a bit tighter on the high side. So yeah, you just got two stocks there in the same sector looking kind of interesting. Might be another week or two of consolidation there, but definitely a sector to be keeping an eye on here.
So Webjet and Flight Centre, that travel space, looking promising in the sense of volume, context, and how they're moving. But it is a hard market to find some leading trades. You mentioned the reset in the portfolio. So I think just jumping back to those who are watching on screen, you've got the portfolio reset. You've got CUB and Spark doing the reset. So these are positions that you bought some time ago, the portfolio positions, and you've done the reset. So can you just walk us through the chart here on Spark?
Yeah, so I had a big position in Spark there, but I did lighten it off into some of that strength there. Sort of recently, sort of I think in July there, but since then the whole thing's sort of tightened up here. So we do have a bit of a VCP sort of set up there, still pretty, and there's a bit of volume here again in the last week here. So a bit of action with the stock, still shy of the previous low there, Chris, too, as well. So I still did kind of feel like this would bounce and recover and go back and fill that gap around the 255 mark. So I still feel like that gap is going to get filled eventually. I mean, the stock, I know Spark's had its issues, and obviously the New Zealand economy has had its issues here, but the stock is trading on around about a 10% yield here. So not exactly expensive there, even though it's had some issues. And New Zealand economy has had some, even stronger issues. And still seeing a lot of companies shut down operations in New Zealand in the last 6 months there. So definitely, yeah, New Zealand definitely needs a little bit of a picking up. But yeah, I still think this might be able to go back and fill that gap here.
Vulcan Energy, different chart, different sector,
Yeah.
but we're seeing sort of these progressively lower lows, but it seems like the speed of these lows has stopped. And now it's actually somewhat reversed, and we're seeing higher lows. And you got a few trend lines on this chart. So what are the trend lines? How do they fit in with these lows?
Yeah, sort of got a little small VCP there on the daily there, and then we do have this sort of this wider range as well. So we've sort of broken through one little range break there, that little descending wedge. which is broken through in the last week here and had a nice run. But it's just gone back up to the top end of that pattern there, so it might consolidate just underneath that. But if it breaks out of that secondary pattern, Chris, I think that'll be more confirmation. So yeah, so I like what I'm seeing here. Good break, good volume, but it's got a secondary overhead here. So if it can break out of that range here, then I think this stock could be in a pretty strong position now. So like I still like this energy thematic here. I think that's still pretty strong sector there. Seen quite a few uranium names being pretty strong here this week. Most of the other energy sectors are still pretty robust as well here. So I do like this sector here.
Well, that's a good one to keep an eye on. Now, you've looked at we've talked about the cycles, the blueprint, and the 5th year and 60-year cycles and so on and so on. There's some great videos. I don't know if anyone wants to watch them. You are taking the opportunity of this period that you have forecast to be a bit of a downside to be away for a little while. So we will have still some discussions with momentum trading and the likes, but is it they're coming back on the 16th, is it, Gary?
Yes, I feel like I'm taking my holiday at exactly the ideal time of the market here. So I think we're due for a little bit of a pause. We've had a hot run here. So lighten the ride off here. And so it feels like it's a good time to have a bit of a breather here. But I'll be away from the next for the next 9 to 10 days. So back on the Tuesday the 16th. Is that right? Yeah.
Yeah, it'll be the next time we come back. So hopefully you've got your report. We'll have an update on this type of report, see the companies that you've looked at, come back at it with fresh eyes. I think last time Gary took a step back, he plowed into this very solid last 5 or 6 months. So we can all benefit from you having a bit of a reset yourself along with the portfolio.
Yeah, it's been a pretty nice period in the market there, Chris, isn't it? So that's we've had it come out of a good low there in April. Their market's been all one-way traffic here so far. So so I mean, like that strength, that's a sign of strength there out of that low. So it's it's been interesting here how many bears have sort of fought the tape here. That's the thing I found amazing the whole time. But even now everyone's pretty. There's still still some perma bears there thinking this thing's going to roll off here big time. I just think you'll see a little bit of a congestion there or consolidation there. I still don't think we'll see a big roll off here. I still think this sort of AI has still got a bit more to play out there. Still feels fairly early in this AI arena. I was around long enough to trade through that 2000 period, and it felt like a bubble for a long time there. I made the mistake of not getting involved in that bubble because I'm thinking everything was too hot, and it just kept getting hotter and hotter and hotter for months and months and months. So these cycles, they tend to last a lot longer than one thinks. So it still, to me, feels pretty early in the AI revolution there, and companies are sort of laying stuff off there, but it still feels like we're in the early stages there of this sort of AI sort of thematic here and what benefits those can bring to companies. So like everything else, Chris, I'll get overstated, overinflated, and then I'll run up there. But I don't think we're anywhere near that point yet.
Right. Well, we'd love to see that play on out. And yes, history tells us that those transition changes, the information age, industrial revolution, they are long segments of the market, economic history. So there's a long thesis to play there. And if anyone's wanting to be able to review markets and data, well, then they can join the membership, click on that. Level 2 is being released by the time this video goes live. It should be there. And you can keep on top of the momentum profile, and then the leading companies, filter them with those solid metrics and indicators that we use for following momentum leaders. At that point, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.